Zach here, and we have a very special guest on the podcast today, Andrew Rostami, the Chief Product Officer and Chief Marketing Officer at Credit Acceptance, which is a publicly traded auto finance company providing auto loans and other related financial products. Andrew, thanks so much for joining me on the podcast today.
It's great to be on the show. Thanks, Zach.
So let's get into it. Andrew, could you tell me a little bit about your background and your role at Credit Acceptance today?
Sure. I really started, as I was mentioning earlier, as a tech geek. I was programming as a kid in my parents' basement, and then I became a software engineer out of college. I ultimately got into financial services with stints in consumer products and retail. I've been in the financial services industry now for over 20 years. In areas from investment management to consumer and obviously business-oriented financing. And the last 2 years, I've served as Credit Acceptance's Chief Product and Marketing Officer. And in that role, I oversee teams that identify ways to identify and meet the needs of our customers. In our case, our primary customer is the dealer. And so how we can incorporate dealer needs, learnings, and insights into innovative products and marketing journeys for them.
Credit Acceptance has seen an increase in new active dealers in the past year, particularly with used dealerships. What factors do you attribute this growth to?
Really to start at the beginning, Credit Acceptance has been focused on really our mission of providing innovative financial solutions that enable auto dealers to sell vehicles to consumers regardless of their credit history, which makes vehicle ownership possible. And so our recent growth can be attributed to a couple of factors. I'd say first, the shifting macro environment, including changes in the economic conditions and lending practices, has created opportunities for alternative financing solutions. So as lenders really exercise more caution, dealers have turned to places like Credit Acceptance for reliable financing. I'd say second, we have a very robust business model, which has played a crucial role. We have a couple of differentiating features that cause our dealers to be loyal to us. First is we help dealers grow their business more broadly. So in our model, we dedicate what we call a market area manager, or what we call the MAMs for short, which provide critical support to dealers. We also get high marks on our dealer support center, which is available to our dealers whenever they run into a problem. Our product is very powerful for our dealers. They can use it at any time and get callbacks and information. And we have a portfolio program that aligns the interests of the consumer, the dealer, and the lender. So the dealer is then incentivized to have a happy customer and a reliable vehicle, and the dealer is able to earn additional cash flow as a result of that. And then last, we just actively listen to dealers' needs and concerns and evolve when needed. So in response, we've implemented strategic enhancements to better serve those dealers. A couple of examples: building our offering out for near prime and above consumers, improving how we onboard dealers onto our program so they're best educated in how to use our product and grow their business.
With many lenders pulling back from auto lending, how has Credit Acceptance adapted its approach to supporting dealers?
Sure. Yeah, we've been in the business for 52 years. So the benefit you get with Credit Acceptance is quite literally you get what you see. And we're there to support our dealers in all types of economic situations. So we run our business to create long-term value for our dealers and our shareholders, obviously, instead of trying to optimize just for the short term. So for us, it's a little less about how we've adapted our approach over the short term to how our business model continues to thrive over the long term as other lenders are having some more difficulty. That said, we really continue to listen to dealers, as I mentioned earlier, find ways to better solve their problems. So we have a pilot program going on right now, for example, enrolling dealers to make it completely frictionless on how a prospective dealer can sign up. We call that a test drive of the system. That's a prospective dealer using real inventory, real consumer information. We've also been building out more systematic go-to-market routines across sales, marketing, analytics, and product that allows us to disseminate best practices more effectively, harness the value of each of those functions for the benefit of our dealer. We're always in the market testing new potential solutions, adding new enhancements. We rolled out a digital remote signing experience, which helps dealers assist consumers wherever they're shopping. And we're also continuing to build out great digital experience for the consumer, so that they're educated, onboarded, set up for success. We found the more successful the consumer is, the better experience they're obviously going to have with the dealer. And so the more likely they're going to go back and shop with that dealer and drive referrals back to them.
Wow, really impressive. And what unique challenges do subprime customers face when seeking auto financing, and how does credit acceptance address these challenges?
Yeah, so at Credit Acceptance, we hear every day about consumers who have poor credit really through no fault of their own. So it can be
Mhm.
due to situations including a medical issue, temporary job loss, divorce, unfortunately a death in the family, really any type of personal hardship, or just having no credit, or even being new to the country altogether. And so many lenders don't give these consumers really a chance. And so consumers have to turn to either not having access to a car, using ride sharing, renting a car, using public transportation, which is not very widespread in the United States, which is why dealerships need an option like credit acceptance. These consumers deserve, obviously, a financing option that provides access to car ownership to prioritize their interests. And cars are really important for economic mobility, especially for those with challenged credit. Research shows that people without cars who then get cars have much better access to jobs and increase their earnings as a result. And really, the best way to convey this is really through a real life example. Do you mind if I tell you really an anecdote of one of our
I'd
consumers?
love to hear it. Yeah.
Yeah. I mean, there's a consumer of ours, and there's many stories. I'm obviously just kind of picking one example. Her name is Takesha. She's in Toledo, Ohio, and she assists nurses in facilities, nursing homes, hospitals. And what she does is she provides transportation to patients in her community who don't have access to transit. And so she was using a sedan, but she wanted to upgrade to a larger vehicle to help more people and earn additional income. But like many Americans, she had impaired credit, and Takesha couldn't get approved for financing. And the reason was no fault of her own. She had actually, she was being very generous. She had co-signed for a friend to purchase a
Mhm.
vehicle. This was before the pandemic. The pandemic hit during, obviously, and the friend ran into difficulty making payments, which caused Takesha's credit score to decline. And although she was turned down at multiple dealerships, she didn't give up. She continued to look for a dealer. She ultimately found one that works with credit acceptance. She got approved to purchase the van. And with her new van, she was able to help more patients. And then for her, she was able to earn additional income. And really impressive, in just a year, she paid off her account. She improved
Hmm.
her credit. She's increased her income, obviously, as a result. And now she's planning to finance a home. And so this is what providing ownership of one car can do. And over the course of 52 years, we've helped millions and millions of consumers. And so this is what we mean when we say we drive possibility.
Really impressive story. And what are some of the latest financing options that credit acceptance offers to help dealers grow their business?
Yeah, I mean, the best place probably to start with that is to talk about how credit acceptance has a differentiated business model, which is as relevant today to dealers growing their business as it was when we launched the program. So we have what we call CAPS, which is Credit Acceptance's proprietary tech platform, which lets dealers approve financing for vehicles in their inventory in 30 seconds or less. Dealers can manage that process end to end. So from application to vehicle selection, deal structuring, contracting, funding, all in the same platform, CAPS. And then we have a support model that I was mentioning earlier that's also very relevant right now to our dealers. Many dealers, particularly in the indie space, are facing problems that they could use a sounding board on. Topics including inventory to buy, merchandising at the store level, how to build their brand and reputation in their local community, and so on. These are topics that our market area managers are very well versed in. And we're also constantly evolving to meet and serve the dealer needs. So, for example, we recently expanded and built out our offering for near prime and above consumers. In Q1, That was about 15% of our originations alone. And this allows dealers to be able to rely on us for competitive callbacks for virtually any consumer, which very few, if any, other lenders can say truly. And so our dealers can have the confidence knowing that credit acceptance can help their customers regardless of their situation.
So, how does credit acceptance lending model align with the interests of dealers, buyers, and consumers?
Yeah, that's a great question. We have a program that does exactly what you say. It aligns the interests of the dealer, the consumer, and credit acceptance. We call it our portfolio program, Zach, and it really sets us apart from the competitors. And so when dealers choose credit acceptance, they can get paid a piece of future collections, up to 80% of future collections, which typically provides the dealer with additional revenue that they wouldn't have access to otherwise. It's kind of like making payments to a 401k plan. You might sacrifice a little bit today, but you then get access to this cash flow stream over time. And we found that our dealers greatly benefit from this additional cash flow stream to have predictability in payments to fund their cost base and grow their dealership. And so the model is really designed to support consumers completing payments. So the dealer's incentivized to get the consumer in the right car and on the right footing, and then they benefit from that. Credit acceptance has been in the business, as I mentioned, for 52 years, and therefore the company really understands how to best support the consumer and the dealer to get the best possible outcome for all parties. And what I was mentioning earlier, what we found, which is really critical for dealers, is the more successful the consumer is, the better experience they're going to have with the dealer. The more likely they're going to go back and shop back with the dealer, hopefully drive referrals back to them. And in fact, many of our experienced dealers with this model talk about the repeat and referral business becoming a very large component of their growth.
In what ways does credit acceptance support dealer growth beyond providing financing solutions?
Yeah, I mean, we do this primarily through the quality of our support model and helping dealers grow their business. So I mentioned our market area managers. It's a big part of our business. I mentioned our dealer support center. They're available whenever they run into a problem. And our product is very powerful that helps dealers grow their business. So they get funded almost real time, which helps them have confidence in further growing their business and investing. And we also bring dealers together to share best practices. So I was at a roundtable the other day, Zach, and we were facilitating it for the dealers, and they were talking about some of the business issues that they were working through with their market area managers. And one of them was buying inventory. And obviously, inventory is always a challenge and opportunity. And they were talking about the challenge of buying locally versus what's needed to buy nationally at a national scale to really get access to a broader pool of vehicles. Another example, I was in a dealership the other day, and what they loved was the ability to pick up the phone and not just call the MAM at any time, but that support center. So oftentimes the agent on the other side of the phone is somebody they already know, right? So they're talking to someone they know, they're talking to someone familiar with their business, familiar with their consumers, familiar with actually their inventory. And that just makes it that much easier for the dealership to grow their business. And then last, as I mentioned, we're really centered on helping dealers solve problems that help them grow their business broadly. Today, we do that by helping dealers structure and find the best possible deals, as well as helping them acquire consumers for their dealership through leads. So these are areas that will continue to help the dealers grow their business.
And how do you see the landscape of auto financing evolving in the next few years, especially for subprime?
Yeah, it's hard to predict, obviously, the exact future, but we're seeing a couple of trends emerge. One is affordability, which I think is a trend that will continue to persist. This is obviously driven by the supply and demand of cars, but also everything from interest rates to rising insurance premiums, the rising cost of groceries, healthcare. I was talking to a consumer the other day, and they had some dental work done that was incredibly expensive. That was affecting their budget. The cost of gas. It's an issue for everyone, but particularly the subprime consumer. Second, we're just seeing more uncertainty in the industry landscape. So other lenders are pulling back. This is particularly difficult on the consumer who needs more options, not less. We're seeing some consumer shopping preferences continue to evolve. We'll continue to see a migration to digital shopping. And even if that's just for researching cars that ultimately get fulfilled by the dealership physically, we believe more and more information can be provided to consumers, particularly subprime consumers, upfront. And really, our business model positions us for growth across all that in the environment. So, we feel pretty good about how we're navigating those challenges.
And how important is technology and credit acceptance strategy? And what tech innovations are you personally most excited about?
Yeah, I mean, technology is a pivotal enabler. It's a core component of our strategy. For dealers, primarily it's about continuing to advance our origination tech platform, which is CAPS, which I mentioned earlier. And it makes it easy for dealers to do everything from submit applications to get funded in as little as an hour. So really, really impressive technology we're continuing to invest in. On the consumer side, we're continuing to provide better technology around self-service options through our portal, through our mobile application, through better and more personalized marketing journeys as well. We're constantly using and advancing our analytical techniques. Obviously, that allows us to provide the best deal to the best consumer based on the right vehicle. We're continuing to invest in marketing technologies so that we can reach the right consumer and dealer with the right messaging to educate them. And really across all of that, our primary focus is on supporting dealers in their critical needs. And those are the focus areas that we look at and we're excited about for technical innovation. So one of those is enabling dealers to more easily identify the right vehicle, right deal, right consumer. Simplifying the application process, supporting business growth through high quality and relevant leads for the dealership. And so while I won't dive into the intricate details, our focus on the technical innovation side lies in enhancing our product to address those specific areas. And really for us, innovation is continuous testing, learning,
Yeah.
and then using that continuous learning to invest in our technology as a result of what we've learned.
And has your team developed any new integrations to make it maybe easier to fund a deal from an independent dealer's DMS, or any like DMS focused integrations, as the DMS is like the central nervous system, for a
Yeah.
dealership?
Yeah, we found that a significant number of our dealers actually prefer working end to end within our platform, which they can handle, as I mentioned, everything from the consumer application, the inventory information of the vehicle, the fees, the deal calcs, contracting, funding, real-time funding. And so they find it easier and more effective, particularly for the subprime consumer, but can be used for all consumer types. And this preference aligns with our expansion to other consumer segments, ensuring that dealers can rely on us really for all of their consumer financing needs. That said, we do obviously currently have integrations with several CRM, lead providers, specific DMSs, with Route One, with DealerTrack. We continue to evaluate and enhance those experiences, Zach, and really our focus is on easing dealer pain points in the moments that really matter, to the dealer.
And can you share any success stories or case studies that come to mind where credit acceptance has significantly impacted a used car dealer's business?
Yeah, absolutely. So one example is a dealership in the Detroit area that was started by a father who emigrated to the country. He started on a dirt lot, like many
Wow.
scrappy and entrepreneurial dealers do, and then they needed to build an office. So during the construction process, they unfortunately ran out of money. The economic collapse of '08 happened. His son was delivering pizza to make ends meet. So that's how dire it was for them. So they turned to credit acceptance for help. And this dealership uses an approach of really listening to customers and using that to reinvest in the merchandise and the business. And they used heavily a market area manager from credit acceptance who helped, who really was a sounding board for them and helped them grow their business. And so that ultimately led them to today, which now they have funded over 13,000 contracts with credit acceptance
Huh.
alone. And
Wow.
based on the business they've already booked, they've earned $11 million in what we call portfolio profit, which is in addition to the advance that they get when they sell the car. And they have an additional 3.8 million in future portfolio profit to be made. And so the program has been so meaningful to them that in a single month alone, they earned over $300,000 in just that portfolio profit. And I met with this dealership the other month, actually at a roundtable, and he told me, I mean, credit acceptance really made us what we are today. They helped us grow to the next level. He talked about what I really found interesting, our approach being different because we're here to support the dealerships more broadly and over the long term. And that really summarizes, again, what we mean by driving possibilities for the dealer and taking a long-term view on how we can help dealers grow their business.
Really impressive story. And kind of on that same thought, what role do you think the auto industry plays in overall economic mobility? And how does credit acceptance contribute to this?
Yeah, I mean, the impact is huge. So car ownership gives people the opportunity to improve their lives, yet nearly half of all people in America don't have access to traditional auto financing. And I mentioned this earlier, cars are important to economic mobility, especially for those with challenged credit. Research shows that people without cars who have access to them get better jobs, increase their earnings, and more than 90% of people who commute to work rely on cars to get there. So, and that's driven by the fact that across this country, 45% of Americans have no access to public transportation at all, right? So just has a significant impact on their daily life and their economic livelihood. And so we feel good about our opportunity to help. So credit acceptance, again, makes it possible for anyone to buy a car from a dealership, get that economic mobility, and really, really enhance their life as a result of that.
And how has the current economic climate impacted consumer behavior in the auto market? And what trends are you observing from your side?
Yeah, we've seen a couple of trends this year from the current climate. I mentioned the first, going a little bit more. The first is around affordability. I mean, wholesale prices remain high, right? So recent reports from Manheim and Odessa show, some steady cooling in pricing, which is good. But if you compare the pricing relative to March 2020 before the pandemic, it's still significantly higher. And so for some consumers, just their real salaries and wages haven't kept up with the price of cars, inflation, and it's really difficult to fit all that into a monthly budget. We've continued to see a progression in digital adoption for consumers shopping online for auto vehicles. We've seen a bit of a slowdown in EV demand, but a bit of a resurgence in hybrids. And then, as I mentioned earlier, we've seen a continued pullback in the auto sector by many lenders, especially for subprime consumers. And unfortunately, that last trend really affects the health of the consumer and the dealer when they need the support the most. For consumers, they need that financing option that provides access to car ownership and prioritize their interests in the process. And for dealers, they need financing options that help them grow their business in a sustainable way.
So, are there any upcoming initiatives or products from credit acceptance that used car dealers should be excited about this year?
Yeah, whenever I talk to dealers, they talk to me about trying to find new ways to bring in more customers to grow their business, and then also making it easier for them to serve those customers while they're in the dealership. And so that's what we're centered on, what we're excited about. A couple of examples. We're continuing to expand our access to a broader range of consumers, regardless of the consumer situation. So this opens up new opportunities for dealers. We're also enhancing the ease of structuring deals, which can be very time sensitive, time intensive with subprime consumers. Dealers can expect an even smoother, more efficient, and finding a more optimal outcome as a result. Additionally, continuing to look at integrations with systems to simplify data entry, back office record keeping. And we're also focused on supporting dealers in acquiring really high quality leads through both their own marketing efforts as well as our marketing efforts. And so through credit acceptance, they can expect targeted opportunities that help directly grow their business. So in summary, we're very excited about the opportunity that we can help dealers with this year, as well as beyond.
So exciting. And thanks so much for joining me on the podcast, Andrew. It's been an absolute pleasure. I've learned a lot, and I'm sure the audience has too.
Likewise, Zach, really appreciated it and enjoyed it.